If we look at it on a state basis, the interesting picture that emerges here is the Northern Territory, and I'm not sure whether that might be a factor of the size of the sample available to survey in the Northern Territory, but certainly a very large increase in the value of assets per average business, and also the net cash income. So I suspect Bruce might have an explanation for that, but it may well come down to the size of the sample included in that survey. But the other point that emerges from that is in New South Wales, the debt and assets under management have increased perhaps slightly less than some of the other states, but in fact the average farm cash income has changed negatively in real terms over that period. So that certainly provides a picture of, I guess, the impact of the drought over that period, not all that period, but certainly in the latter part of that period, 2006 to 2010, and something certainly to pay attention to. And the other thing is the big growth in both debt and the value of assets held by those businesses in Western Australia. I think the real issue that emerges, though, is if we look at the businesses by scale, and for example look at what's happened in terms of the businesses with a farm turnover of between $100,000 and $200,000 per annum. What we see there is certainly the value of land and fixed improvements have increased, probably more so for the crops, which is the red bar, and the mixed livestock and crops. If we then look at the farm business debt, it highlights that the growth in debt has been most for the cropping sector, so the cropping producers have taken on a lot more debt. Their real total crop gross receipts in the comparison between the two periods has reduced, their total cash receipts has reduced, and the net farm cash income available to service that debt has also decreased, and more so for the cropping sector than the other sectors. So the 2010-11 and 2011-12 years will certainly provide an opportunity to repair that, but it certainly does highlight that there's some degree of financial stress being experienced in that scale farm business sector, and also in the $200,000 to $400,000 you see a similar pattern emerge, so that the cropping sector in particular, again increasing debt by more than the others, and the net farm cash income for those businesses certainly decreasing in real terms by more than for the other two sectors. And again, I hasten to add that this data stops in the middle of 2010, and so it doesn't present the full picture of what has happened since then. But it does highlight to us, I think, some lessons about how well those farm businesses have managed the extent of risk and volatility within agriculture over that period. I guess the first point that we can certainly look back to is that Australian agriculture is a more volatile business environment than agriculture in most other nations, and is more volatile than virtually any other sector of the Australian economy by quite a large proportion. So risk management is obviously a key aspect of successful business management in the sector. I guess that highlights to us another point, and that is, I think, that the business prescriptions we sometimes hear that are made in relation to agricultural businesses compared to other sectors of the economy need to be treated carefully. And here I'm talking in particular about comments that agricultural businesses tend to have lazy balance sheets. They tend to have relatively high levels of assets compared to debt, compared to other sectors of the economy. And I think these figures perhaps highlight to us that that is in fact quite a prudent situation, and that to take on the sort of debt to equity ratios that other businesses in other sectors of the economy would regard as more normal would in fact not necessarily be prudent in the agriculture sector. I guess the picture that emerges from this is that the small to medium-sized crop specialist would look to have come out of this period more vulnerable to the volatility that is experienced in the sector than they went into that period. So the extent to which those debt levels are able to be recovered, or the income levels are able to be recovered over the next couple of years, will be quite critical to those businesses, and I think that's quite an important point to watch over the next year or two. The mixed enterprise businesses seem to be coping better with risk, and I think this gets to another point, that there is a degree of, if you like, complementarity between those different enterprises in terms of the volatility, and whilst a lot of focus is put on gross margins per hectare, I don't know that there's enough attention paid to the risk associated with gross margins per hectare for the different commodities, and the potential risk management that comes from perhaps having multiple enterprises. Farm management deposits and income averaging are obviously quite an important part of the management tools available to farm businesses to handle that sort of risk, and I guess this data reinforces the importance of those as some of the tools that are available to farm business managers. And finally, I think there's probably a need for a much stronger discussion around some sort of risk-adjusted notion of enterprise gross margins or system-based gross margins discussion. So if you look at publications, if you look at discussions with consultants and farm business advisors, quite often it comes down to what the gross margin per hectare is for a grain production enterprise, for example, compared to a livestock production enterprise. I think maybe the lesson coming out of that last decade or so is that there is a need for a consideration of some sort of risk adjustment in that discussion. In other words, helping farmers to understand the risks inherent in chasing that maximum gross margin per hectare that might be available from a cropping business, and also just looking at the whole systems approach to a farm business, recognising that most of our farms are in fact mixed enterprise rather than enterprise specific. So I think overall, I guess the picture that emerges is Australian farm business managers are probably as good as anyone at managing risk, but there are some warning lights flashing, I suspect, that it's something that needs further attention as we progress into the future. Thank you.